following. You're not the only one.
No, you are a great speaker. And ladies and gentlemen, that'll bring us to our next great speaker. He's the CEO of Trade the Pool, one of the largest prop firms in Tel Aviv, where he is the head of traders. He has over 15 years experience in day trading stocks and futures and also develops technological tools for traders. He also happens to be a vegan. Here to present how to scale into a trade, it is an honor and my pleasure to introduce Mr. Michael Katz of Trade the Pool. Welcome to Traders Corner, Michael.
Hey, buddy, how are you doing? Thanks so much for the intro.
You're very welcome.
Is it okay if
Michael,
I'll share? Is it okay if I'll share my webcam as well?
Absolutely. You can do whatever you like to do. Most presenters like to share their screen and webcam, and then when they begin speaking, they turn the webcam off.
Okay, no problem. Let me know if I'm on. And
I can see you, brother.
yeah, okay, thanks so much. I want to believe that I have a nice face to look at, so yeah. Hold on. Close the light. Yeah. All right. So we do have great presentation, Norman, if you're still with us, and we should definitely be in touch because Trade the Pool is an online prop firm for stock traders, and we'll talk about that.
Thank you, Michael.
Yeah. And like you said, after me are going to be great speakers as well. Shout out to my buddy Michael Doss coming after me. So guys, how are you doing? Let me, before we start, just to get a little bit to know you before we're going on. So if you can type in maybe, just to let me know, type in 1, 2, or 3 in the chat box. And if you guys are stock traders, forex or future traders, and if you want to add more information like how long you've been trading for and stuff like that, that could be very helpful to our presentation. And you know, since we're already here, let's get to know each other. The guys at home can write questions, right? Not mistaken?
They can. It'll show up in the questions box. Yeah. The chat's only for admin.
Okay, gotcha. All righty. So the chat is only for admin, sorry?
You can interact with the audience with the questions box. The last question there.
Got it.
The chat's for you, myself, and the other presenters.
Got it. Thanks. All right. Nice. Lots of questions. Okay. See 1 and 3. Okay. People from home as well. Nice. All right. So let's start with quick introduction. I'll keep it short because we got 45 minutes to cover a lot of information today. And like my friend here said, I'm the CEO of Trade the Pool. We are an online prop firm that funds stock traders. So basically, if you trade in stocks and you want to get funded by us and trade our own capital, just you go to the process of the evaluation phase, pay a little fee. If you pass that, you get funded and trade real money on our capital. We take the losses, we split the profit, and of course, I'll touch that and talk about it a little bit later on and during the presentation as well. And if you have any question during that, feel free to drop them in the questions box. Besides that, as mentioned, I also been trading myself, day trading for the last 15 years, mostly stocks, also futures. I was the head of one of the prop firm, the largest prop firm in Tel Aviv back then, and we'll talk about that in a second. And also developed some software that help traders basically to manage the trade automatically and stuff like that. Live in a moshav, it's like a small village. Grow my own vegetables, and I guess that's like the balance that I have between trading, involved with money, and the other side of it, nature. So that's what keeps me grounded, I guess. So let's talk about it. The reason you see the LSD here is because a story that I have to share with you today that brought me to these initials. It's not what you're thinking of, the normal LSD. but basically initials that covered 3 principles that allowed me to get to the position I'm at today. So I had, like any one of you guys that went through the path of becoming a trader and becoming a profitable trader. I walked through that, and I guess some of you will feel the same. And with those 3 principles that I'm about to share with you, basically those principles got me to where I'm at. So it's important for me, before we'll dive into the real how to manage the trade properly and how to scale in, to cover those points. So as a trader, you know, I struggled pretty much like anyone else. For the first 6 months, I lost 30% of my account, but I traded only with a $10,000 account. That's all I had back in my early 20s. And pretty quickly, after a year and a half, 2 years, I just realized, after analyzing my performance, I actually understood that the main reason that prevented me from becoming a successful trader is not because I didn't know technical wise how to read the chart, or the mental aspect of it affected me, but rather the lack of capital. And that's the L for the LSD, because when I started to trade, when you trade on $10,000, it's not enough to play around with. And as soon as you lose money, the mental side of it start to push in and affect your decision making. And you know, I saw tons of times when I tried to take a trade, a great setup, the perfect one, but since I didn't have enough capital, I couldn't trade it because the price of the stock was $200. Or I took one trade, tried to get to another one, couldn't because I didn't have enough money. And the second trade that I couldn't take actually made a lot more, could have made a lot more money compared to the first one that I did take. So basically, after a while, I just understood that $10,000 is not enough for me to trade with. I went to my folks, they are good guys or good folks, and basically asked them to loan me some extra money. And when I started to trade a little bit bigger with $60,000, I started to see progress, and basically it led me to that dream. You know, I was again in my 20s, so the dream is pretty simple: wake up in the morning, play FIFA or Pro Evolution on my PlayStation, and after that trade, go to sleep and repeat it. And for 4 years, everything was amazing. I literally dream. I didn't have a Lamborghini or anything like that, but I literally did what I wanted to do. And you know, back in your 20s, when you don't have kids and you don't have a wife or just a girlfriend, you're actually not committing to anything, so you just do that on and on and on. That was great. But roughly around 2015, the market took a nice dip of 5 months, and I did roughly the same. And when you go into a cycle of losing streak, and you basically start losing money to your parents because it's not your money, the emotional part of you know, of the trading or the losing part is basically starting to affect your judgment and the decision making on a regular basis. So I was kind of stuck in a snowball, you may say, and couldn't get out of that. So imagine losing your parents $10,000, and the next day you meet them over dinner with your siblings, and they know that you just lost $10,000. And it was kind of a lot for me and for them at the time. So that was a crazy snowball, and I couldn't get out of it. I knew that I need to find like the second principle, basically, or the second rule that will push me back to the game, because I knew how to trade. It just, the mental side of it affected me much. So back at the time, I developed a software that managed the trade automatically or semi-automatically for the traders. And I was eager to find an institutional traders that maybe want to try to use that platform, that's our software, and basically take advantage of it. So I made a few phone calls and I got into a prop firm in Tel Aviv. And we sat down, we spoke, I told them about the platform, and roughly 15, 20 minutes afterwards, I was interviewed in order to join the firm. So that was something I didn't expect, but was just out of the blue. And that led me to the second principle, which is the S in the LSD, someone else's money. And this is something also Norman just mentioned before. When you trade on someone else's money, you automatically detach yourself from the aspect of money in trading. And as you know, anyone that been trading for even a month or so know how effective is the money wise, or how connected is the money wise to the decision making on a regular basis. Doesn't matter if you day trading or swing trading or even as investors. And as soon as you do that, you detach yourself from that, because you don't really care about someone else's money. It's not your parents, it's not your friends and family, right? It's just a company, a random company that you don't really care about in a good way. You automatically create yourself a great path of decision making and not involving the money side of it. So that's what I did when I started to trade at. And by the way, if you think of it, all the big players in the industry, doesn't matter if it's stocks, futures, forex, options, whatever it is, the big money that in most cases will make money, right? Like banks, institutionals of any kind, they also trade on someone else's money, hedge fund, right? Or bank. A trader in a bank or in an hedge fund or a portfolio manager, it doesn't trade on his own money, or maybe he does, but the main account that he owns, like in a prop firm, is actually not his. Is trading on someone else's money, so we can automatically detach that aspect. And that's an amazing idea when you think of it, and that's one of the main reasons why most institutional traders actually make it in the field, comparing to us as retails, that, as you know, the statistics, 95% losing money. So that's simply a great idea to think of. So when I understood that there's someone else's money, I started to trade, obviously, in that prop firm. 2 years later, I became the head of the traders. I saw a lot of good traders. Some of them didn't make it, but generally speaking, it was a great experience until I reached the point of that $91,000. And that was obviously a losing trade, just to clarify it. It was, when you think of the days, it wasn't just a normal day, like a Monday morning, July, sun is outside. I'm wearing shorts. I'm taking a scooter to the office. Nothing really was any different kind of way. And basically, I started to trade. I prepped myself, of course. I saw the right stock, SPCE, Virgin Galactic, owned by the British billionaire Richard Branson. And I started to trade like any other day. I was up $2,000 in the first 4 minutes. And it wasn't, I waited until I saw another push in order to start taking some partials. But instead of getting that partials, it began basically from that point a roller coaster of 3 days that led me to that loss of the $91,000. And we'll talk about that and what got me out of it. And after 6 months, I returned that loss. And this is something I want to put my focus in today and share with you, so you will have the idea first of how to get out of those situations, or maybe even not to go so deep in that loss. And we will cover that as well. So basically, just to summarize those 3 days, to keep it short on that, I started the first day, a drop, 2 hours, around 2 hours after the opening bell, I was down 25K. And the risk manager came to me, knocked on my door. I opened, he said, "Are you okay? Everything is okay?" Because he saw a crazy drop comparing to what usually I did. You know, I did have losses of or drops of 10K and 15 and even 20, but it wasn't that rapidly. And in most cases, I got out of them. So, you know, he asked me if I'm okay. I told him, yeah, I'm perfectly fine. And I did believe at that time that I'm okay and I would get out of the trade, out of that loss. And you know, I started to add to my position, basically averaging down. Of course, it planted down like crazy. The sellers were really aggressive on that day or those 3 days. And basically, they dropped the price so rapidly. So I'm finding myself after another hour or so, 30K down, adding to my position and basically covering some of my losses. So I will have enough buying power, but adding more and more to my position. So that's the first day, almost $30,000 down. One of those days as well, 21 and 29 unrealized. And again, I'm adding to my position, averaging down. So I'm putting a lot of size, like 20,000 shares, 17,000 shares and stuff like that. And as you can see, if you look at the last and the average price, I wasn't too far away from my average price. So I always kept it like it's 50 cents. That's it. That's all I needed in order to get in back to the game. And the price just melted down. So I'm covering some of my losses. I'm adding to my position. Second day, trying to get out of the mess. Couldn't do much. And believe me, I tried everything I could, everything I knew, because the sellers was too aggressive, basically. So nothing I did actually worked. And I ended up, that's the third day, eventually ended up with the 91K. I don't know if you can see it. It's kind of small, 91,567 of that loss. And that was a very rough time for me at that moment, because I'm not used to lose that kind of money, basically. And again, I had like 10, 15, $20,000 loss or just unrealized, and I got out of. But finding myself, you know, as the head of the traders, losing 91K, everyone is looking at me. What I'm about to do next, basically, can I get out of it? I need to set an example for the other traders. New trader just came in, and you see the head of the traders losing 91K. So that was a crazy time. I took my stuff, got out of the office, and didn't come back for 2 weeks. What I did in those 2 weeks was two things. One, understand what didn't work in this situation and in this trade. And second, what do I need to do in order to not repeat it again? So of course, one thing I did is just analyze the chart, the hell out of the chart. I sat down and saw all of my executions. I had like roughly more than 100 executions in those 3 days, like in and out, adding more position, closing some of it, adding more. It was a battle war in those 3 days. And I didn't cap the like the small triangles that show exactly where you enter and getting out of. But if you looked at it, it was like crazy. All the chart was covered with like triangles, blue and red for entries and exiting. So yeah, it was a killer for me. And for those 2 weeks, one, analyzing the chart again, trying to understand what happened and what I could have done better. And as you can see also in this case, I was like 40 something last price. My average price was 43.50. So for a stock that continue over and over to drop, that wasn't, generally speaking, in most cases, I would have seen a pop in the price, and I would have got out of it pretty nicely. But in this case, it just melted down. So I did saw some flaws in my trading, like technical wise, when I could have had in a better position, in a better place, add more to my position, and maybe cover a little bit faster or more of the size, stuff like that I could have done better. But I can, like, if I want to give myself any degree or anything like that, I can say it was like 80% good trading on my end, 75% when I'm talking about exiting and entering. So I could have improved that, but basically I did okay on that side. My main problem was, because I was the head of the traders, and because the guys came to me, the risk manager came to me and asked me if I'm okay, and the CEO at the time came to me, asked me if I'm doing okay after I was down 30 and 40 and 50, and they saw me already getting out of the mess before, although with not those numbers, but like 20,000 or 15,000. So they believed me, and also I told them I'm doing fine because I really believe that I'm okay. It wasn't about ego or anything like that. I'm not into egos and stuff like that, but it was just, I really saw the chart and I really believed that I can manage it properly and exit with a small loss, or in the wildest dream with a win. So, and that was my main problem. I didn't have boundaries, basically. I didn't have this limitation until I reached that 90, and I said, okay, I'm not going all the way to the 100 because it's going to be a crazy move. And analyzing the chart, big picture, I see it dropping down even more, so I gotta get out right now. So what I did is basically thought of a way that I need to manage the trade more accuracy, more properly, I guess, with boundaries. So I did two things that led me basically to where I'm at today as the CEO of Traded Pool, and I have a count of $5 million, and obviously all of our traders are trading big numbers as well. And that the stuff that I learned basically gave me the tools to give it to right now to Traded Pool and basically work at the right way, I guess. So first, I built some default mechanism to manage the risk, like stop from a daily loss and 30% out of the daily loss, and all those automatic mechanisms that will control my risk and not allow me to cross them. And although, again, we did add them for the junior traders that joined the firm, but it didn't apply on me, and it should have. Even today, I still have very strict rules. I'm not going to let myself cross those boundaries. And of course, because I needed to prove to myself and obviously all the traders around me that I know how to get back from that loss, I had to take those 2 weeks just to analyze everything and find those solutions, basically. So the default mechanism definitely helped me to get out of, but mostly it was the part of the risk managing, or better yet, the trade managing. And I want to take a minute or so to talk a little bit about that. If you have any questions, I see you guys, some of you guys are writing. Feel free to drop them, and I guess we'll go over it later on, just as we will finish the presentation, unless it's something really that talking specifically about the topic that we are at right now. So let's talk a little bit about risk management. Generally speaking, obviously, the notorious name, everyone is talking about risk management. And I guess the first thing we need to understand is the tolerance that you have for risk. Some of us will have a larger tolerance than others. Depends on our background, depends on our, where we're at in life right now. We have kids or not, we have mortgage, we have lots of money from our family or whatever it is. That will define personality, of course, that will define our risk tolerance. And when you understand what is your risk tolerance, you can start manage it properly. It starts with understanding how much money you bring to the game of trading. So if you have an account, your own account, how much money are you willing basically to invest or to put in your broker account, and how much money out of it, how many percentage out of it you are willing to lose, and all the thing around it. Basically, when we're dropping down or zooming into a specific trade, what I like to do, and this is the way I manage my trade right now, and I will share with you some of the trades I made the last few days or so, just to get an idea, is first understanding your performance. So basically, let's say you started to trade, you've already been trading for 6 months, you have enough data to understand what you're doing good and what you're doing bad. As soon as you understand which trades were the right setups for you, you start to categorize them with basically and split them into 3 categories. The A+ setup, the top-notch setup that you want to see every day, the one that you see in the books when they telling you that when they teach you about how a bull flag should be or a cup and handle or whatever it is, and basically you want to take that, the A+ setup. Then you have the A setup, and then you have the B+. Of course, as you go to the B, it will be a lower success rate, and maybe when you have like you should, if you don't, you should have like a checklist of the reasons why you want to enter the trade, right? I want to, let's say if it's a buy the dip strategy, so you want to have a drop in the price, you want to saw the price reaching a certain level of support. You want to see increased volume at the bottom because that will give you the trigger that market makers are manipulating the price. So those kind of stuff. As soon as you have this list, the A+ setup will be a V, like a check on every parameters, and a B will miss a few check on those in this list, basically. So that's the first thing you want to do. And then if we're talking about day trading, you can obviously do the same thing for swing trading, but then go and build yourself, let's say if it's day trading, build yourself a daily loss limit. So you have, let's say, $1,000 you're willing to lose on a certain day, okay? It doesn't have to be obviously 1,000. Again, depends on your risk tolerance, the size of your account, whatever it is. But let's just take it for the example, $1,000. You're willing to lose on every given day $1,000. That's given. Now, that's what you decide. Now, from that, you don't want to spend $1,000 for one trade. You don't want to risk $1,000 for one trade. So you want to basically take 30 to 40% of that daily loss on an A+ setup. So let's say you're risking $300 or $400, on an A+ setup, right? And then for the A setup, you want to take 20 to 30, and on a B, you want to take 10 to 20. Okay, so that's like a basic idea of how you want to decide first how much you're willing to risk, and then of course you will from it take the number of shares you need to buy. So let's say you have an A+ setup, you got $300 or $400 of risk that you want to take. And from there, most cases, and this is something that most traders I saw struggle with and lose a lot of money because of it, what they'll do, they will take the full $300 or $400 on an A+ setup and go all in at once. So they have this entry price and then the stop loss price, and that's it. When it drops to your stop loss, you are out with this loss of $300 or $400. And that's, in my opinion at least, if you guys have anything else that work better for you, so stick with that definitely. But in my opinion, that's a wrong way to look at, because in most cases, as you're probably aware, the stock will play, even if you have the right idea. Yeah, you found the great setup, the right idea, and you enter it. In most cases, it will drop to take more liquidity from the stop losses, and then maybe we'll play a little bit longer, and then we'll make the right move to your advantage, and basically will show you that you were correct on the idea. But in reality, when you trade, you will have a lot of choppiness before it will go to your favor. So instead of taking the $300 and risk it just entry and stop loss, build it in a way that you can actually add to your position, either a losing or a winning position, but add to your position as long as you keep those boundaries of the $300, right? So let's say you entered at 50 and then you have a stop loss at 49. Generally speaking, you will take a $300 loss. That means 300 shares on $1. And if it will drop, it will take you out. Instead of that, get into a position with $100 risk instead of the 300. If you see that the price goes against you and broke the 49 or the 49, and you're still in $100 loss, so you didn't lose the full amount that you plan to risk, the $300. Then it will reach another support level, then you can add more to your position. You're averaging down, but you're still in those parameters of the $300 because you didn't start with $300 risk. So you add another $100. And if it will go against you and you still understand technically, you still see that we're continue to save the same right of setup, the same idea, the same right idea that you planned ahead, and basically you add another 100. So now you are risking the full $300. And if it will go to your favor right at the beginning, you will find a pullback or anything in the price that will indicate that you can add more to your position. Let me share my screen for a second with some of the trades. Yeah, I think it is. Do you see my second screen? Let me just know that you see the one that I just shared. Okay, great, thanks. So that wasn't a good trade from yesterday, but let's take something. Okay, this is a simple one. For example, on Tesla, I'm mostly in these days, I'm mostly trade big companies like Tesla, mostly Tesla or the Qs, but you don't have to. Obviously, many years I traded stocks in place, and gapping up, gapping down, stuff like that. But these days, just because I'm managing the whole company here, I don't have enough time to trade, so I'm very quick on my trading, my entries, my exiting, and I usually do like 1, 2, top 3 trades a day, not like before when I sat down and traded for 2 hours or even more. So in this case, you start with a small amount. Obviously, your stop loss should be at the top here, right? But instead of risking, let's take the same example, instead of risking $300 right at the opening and put your stop loss here, I'm getting in with a small position. So let's say instead of the $300, $100. It goes to my favor, fine, I'm adding more. pulling back, a small pullback and another drop, adding more, etc. Of course, the exiting should be maybe a little bit better than what I'm showing you right now, but basically it obviously depends on the, on the list of the reasons to cover the trade. But the idea is, in this case, it was, again, went perfectly fine to my favorite, so it wasn't really the right thing, or like not a lot to learn from. But we can see, for example, on SE, I'm talking about this trade, there was a loss here, but in this case, that's a good one to learn from. I started to, that was the cover, and then I started to add to my position. It went to my favor, adding more. And again, if I would risk the full $300, in most cases, it will take me out, and my success rate would have been much lower. And when you have success rate, lower success rate, your mentality also comes into play, right? Because let's say if you have 7 out of 10 trades winners, or 3 out of 10 winners, in both cases you can make money, right? You can have 30% success rate, but the ratio, the average between your losing to your winning is much higher, and then you can make money also with 30% success rate. But if you have, let's say, 70% success rate, it's much easier for you first to get involved in that trade, because you know that in most cases you will be right. And on that matter, it's easier for you to trade basically, and to keep it positive when it comes to this game of trading. So adding to my position, and when I start also, it's also something that helped a lot of our traders. When you start small and not risking the full $300, you feel okay to enter whenever the price is ready or not completely ready, right? Because in most cases, when you enter in with $300 risk, like the full risk, then you need to have a specific point that you enter in, and a specific point that you have your stop loss. In most cases, it won't be like this. You don't give yourself enough space, enough room to play around with. And as we're very familiar with, especially in stocks these days, when they're super volatile, the price will easily go to your stop loss, take it, and then drop. A lot of shakeouts and stuff like that. So when you start small, it's easier for you to commit to the trade, and you don't need really to execute it perfectly. And this is also something that worth to mention, because a lot of YouTubers or whatever it is talking about the perfect strategy and the holy grail, right? But it's not really about the strategy. It's about managing the position. It doesn't really matter if I'm entering here or here or here or just a minute before or 2 minutes later. It doesn't really matter. That's not the point of trading. The point of trading is to manage that trade, to manage that risk. And that's basically what we have as traders comparing to a casino, right? You go to a casino and you go to a roulette and put red or black, and it doesn't really matter what you want to do in the middle. As soon as you put your money on the red, that's it, you're done. It's going to win or lose. And the amount of money you're going to lose already set. In those cases, when it comes to managing your trade, you can first scale into a position and build it as it goes to either your favor or against you, but still the idea remains the same. And you can always cut your losses, and instead of losing the full $300, you can lose $200. Let's say you're already in with the $300 risk, but it goes against you, and you see that there's nothing really much to do here, and the market shift direction or whatever it is, then you can basically cut the loss as well. Let's see some other examples here. that's, look at this, for example, that's buy all the way here. It dropped nicely. I didn't buy at the bottom. It doesn't really matter. I missed like 50 cents of a move if I wanted to go straight to that tail, but it doesn't really matter. I'm building my position. As soon as it break through, I'm adding more, and then started to cover my trade as it continued to my favor. That was the first trade from before what we just saw. In this case, it went again to my favor kind of quickly, but the risk, if I would put on the risk, the full risk right at the beginning, my decision-making part, the mental side of it, would have got a little bit shifted, I guess. And basically, this is why you want to start entering small. If it will go to your favor, you can add on the pullbacks, right? I entered here. It wasn't enough for me to take the full position, so I added more as it broke through and retested. And then when it moved to your favor, you can take those profits, obviously. And that's a great example on SGAN, because it dropped. Basically, if you see the green lines, that was like the scenario I planned ahead in at the pre-market. Dropped, retested. I entered right at the bottom. I mean, in most cases, that's a perfect example for what we're talking about right now. In most cases, no one wants to enter here right at the bottom. It doesn't make sense. But if you manage the trade correctly, if you manage the risk, you can easily go ahead and enter right at the low and still be okay if the idea goes to your favor. So this is what you need to remember here. You want, obviously, after you created this scenario and you understand what you're looking for, as long as the idea remains in the same way, what you're thinking of, that's fine, that's good. It doesn't matter if you enter right at the bottom. I mean, that's probably the worst execution to the short side I had in many days. So it doesn't really matter because you enter small. And when you enter small, you have enough space to add another chunk and another chunk and another chunk, as long as the idea remains, and then cover when it drops or goes to a favor, basically. So that's really a great example, and I hope you guys can take this one, really save it, because you don't need to be accurate on your execution. You need to be accurate on the managing trade and managing risk part. And I guess if I'll continue here, you will see that's also a great example. I'll finish with that. So basically, as you can see here, I bought on the first candle. It went up, straight up, but I couldn't get out of the trade because it was just like 10% out of the 30%, right? So it dropped again, added more to the position, added more, and everything here, all the buys around it was basically in my risk parameters. I didn't cross those numbers that I'm risking. So if you're risking $300, that's $20, that's $100, that's $70 risk, 80, and so on until you reach that number, the big number of the 300 or the whatever it is that you're risking. Only then you can actually start and say, okay, that's it, I'm done. I reached the point that I'm risking $300. Now that's my stop loss. Whatever it is that's going to happen, I'm good with. I took some partial out. It dropped again, basically pulling back to those levels, adding more, and then covered when it popped up again. But that's also a great example to understand that if you're not being accurate with your execution And if the price goes against you and just take some stop losses out, you can still be profitable. And I guess that's the only way, in my opinion at least. Maybe someone else will tell you otherwise, and that's, again, totally fine. In my opinion, that's the only real way that you can make profit in the market when you're trading. And I also see it with a lot of our traders that took that time to develop their own way of managing the trade, but similar to what I'm showing you right now. And basically that led them to success. So hopefully you take some of the things that I shared with you today, and that will give you another push in your trading career. Maybe just to summarize things, or talk a little bit about Traded Pool. As I mentioned before, basically we are an online prop firm, fund stock traders. If you go to our website, tradedpool.com, first of all, you have 14 days free trial. You just sign up for free. You go ahead and download the platform that we're using, the platform called Trader Evolution. That's our proprietary platform. And you have 12,000 symbols, stocks, and ETFs. You can short any penny stocks, even hard to borrow. And basically, this is the place you want to be if you are a trader, a stock trader. We're just about to, for this moment, we are only for day traders. But in the next 2 weeks or 3 weeks, we are going to launch a swing trading program as well. So for those of you guys who like to, for some reason, hold position for overnight, definitely check us out. We have plenty of materials. When you sign in, you get trade, either Trend Spider or trade ideas, subscriber, also great other partners that we will collaborate with in the near future as well. So check us out.
Michael, I want to thank you for the great story presentation, and I will absolutely put my seal of approval on scaling in as a proven mathematical strategy to really increase someone's profitability. Trade management is so crucial. That was an incredibly valuable story and valuable information. We appreciate you taking your time out of your day and joining us on Traders Corner. Ladies and gentlemen, this is Mr. Michael Katz, who's the CEO of Trade the Pool, the largest prop firm in Tel Aviv, where they do fund stock traders. If you'd like to learn more about Michael's special offer, I put a link to his website in the chat box. You can find him at tradethepool.com. Thank you so much for being here today, Michael. We hope you come back, and I hope you have a great end of your week.
Thanks so much. Yeah, highly
Be well,
appreciate it.
sir.